And here's the rules and criteria that I figured out to spot the high probability order block rather than just any old order block on the charts. So the first step, what we want to see for a high probability order block is, well, a bearish order block, is the run of a high. After a price runs the high, what we want to see is a break in market structure. So after we've got the run on the high and the break in market structure, have you ever wondered why not all order blocks work, or which order block to use out of the many that appear on the chart? If so, keep watching, because today I'm going to be breaking down ICT's definition of a high probability order block. And by the end of the video, you'll know exactly how to trade and spot high probability order blocks for yourself. Before I figured out what I know now, I used to see them everywhere on the chart, and I'd highlight them out thinking that I've done everything correctly, but to my surprise, they wouldn't hold. And it was frustrating. Like, no matter what I did, they just didn't hold. And realistically, I couldn't go on anymore, so I had to do some research. And here's the rules and criteria that I figured out to spot the high probability order block rather than just any old order block on the charts. So the first step, what we want to see for a high probability order block is, well, a bearish order block, is the run of a high. After a price runs the high, what we want to see is a break in market structure. So after we've got the run on the high and the break in market structure, where is the order block? The order block is the last series of candles in the sweep of the high. So somewhere like there to there. This is how I'd mark it out. Same thing for a bullish order block, just flipped over because price is symmetrical. What we would want to look for is the run of a low and then a break of market structure using the last series of candles that ran the low as the order block to hold price. So along with the criteria, what I also figured out during my research and back testing and collecting information is the fact that there's two types of order block that can be printed in price. We have low probability order blocks and high probability order blocks. The difference in the two being the size of the bodies, of course. How I would trade the high probability order block with the large volume versus trading the lower probability order block with the lower volume. How I would use them is on this bearish order block, the last bullish candle before the bearish move, I would use the open of the candle for price to trade back into and then continue going lower. Same for this bullish order block. I would mark the top, which is the open of this candle, and wait for price to retrace into it before continuing higher. The difference on the low probability order blocks is the fact of there's more wicks. What I personally do is use either the wick to the open for the bearish order block for price to trade into, or the entire candle. It's up to you. The same with this bullish order block. We would want price to trade back into this using the wick to the open or using the entire candle. So now that you understand order blocks, the criteria, and high probability versus the low probability, I'm going to go into some examples and chart replay. So a gem that I want to add in for the order blocks is that you want to trade order blocks that are in line with your higher time frame bias. That is the main point and the most important factor for order blocks, because if you're not trading in the right direction, it doesn't matter how much lower time frame technical analysis you do, your order block is going to be traded through. So make sure that you are trading in line with the higher time frame bias, only looking for order blocks in line with that. So with that being said, what we would want to do is mark out the highs and the lows in the marketplace. We see here we've got a low marked out in a slightly bullish market. We have a run on the lows. Price then breaks market structure, which is the second step of what we're looking for. And then what we do is we highlight the series of candles that ran the low or high, being this candle here. If we want to use the same way I measured it out, we would use the wick to the open like that, and we would have our stop loss just about the low and take profit somewhere up here at some equal highs. So we want price to trade back into the order block and then go. It can come deeper in here, but let's just see how price reacts. So as time goes by, price does come deeper into the order block and has a nice candle reaction. Let's let it play. And as you can see, take profit was hit. So here we have another example of price running a high, and what we want to do after that is see price break the structure of the run into the high. Here we see we have a candle close below that low, meaning we want to mark out the order block. Now in this situation we can see that it starts from here to before it runs the high, but we can see that this candle also has a lot of the volume, so we can just use this candle like that as our entry, wanting price to trade back into this area and then lower. Now how lower you want it to go from the order block is a complete different video, and there's different tools that you can use to predict how far price will go after tapping the order block. But let's see how this one plays out. The price has a deep run lower, but then automatically draws right back to this specific candle where we would have had our entry or taken a market execution. Now we are looking for price to target these lows at a minimum for a nice reaction from this order block. And then we get that complete reaction from this order block, and this was a short. Now this is a fractal pattern, so this can happen on all time frames, so I'll just be aware of this pattern and be in line with the high time frame bias and just look for them printing in price. So here we can see that price has swept this low. Now what we look for is a break in market structure, which at this point we can say is a nice break in structure. So now what we look for is the candle, the series of candles that ran this low, and we can see that right now, some nice candles. Using this candle here being the last one before the up move, where we would place our entry like that and stop loss covering the low of the order block. And let's see how price plays out here. In this occasion, we can see that fractally we have a larger swing in play than just this candle. As we can see, we ran some lows here. If we zoom in, we also ran some lows here and broke structure here and had a retracement back into the order block here, a retracement back into the order block here. So when price had a larger swing fractally, we could use all three of these like that to capture the entry. Some people as well also like to use 50% of all those swings put together, which is where I kind of had the entry, but it still dodged that. So this one could have been one that you missed. Nevertheless, if you didn't miss it, you knew the intended direction, you would have been able to get in somewhere like that, knowing that you've got these series of candles here. We come to the charts again, we can see that price has ran a high here, and then what we look for after our highs run is a break in market structure, and we have one right here. Again, what we look for is for price to trade back to the series of candles that ran the high, being these candles here. But like we see with the last example, price doesn't have to go to this last candle, but we can always have it highlighted as that gives us the best risk to reward for these order blocks. You want your stop loss to cover the high of the bearish order block, again targeting the low that retraces back into it. And let's see how price reacts. We're looking for this to that simple move. So we get a mitigation of the area after. Price runs this liquidity that was printed. So we get a mitigation of the order block area after running some buy side liquidity that price gave us intraday. and then the next day this order block holds and price moves lower, following the higher time frame bias being bearish. But yeah, that's it for this video, guys. If you found it helpful, leave a like and subscribe. If you have any questions or anything I said you wasn't too sure on, leave them in the comment section and I'll be more than happy to answer your questions and get back to you guys. But yeah, that's it for now. I hope you all enjoy the Christmas break and the Christmas holidays, and you still put that work in on the charts, back testing, gathering data, researching, and yeah, just getting better in all areas of life. But yeah, that's it for this video. Peace.